Hello everyone and welcome to the Geeky Investor channel where stocks talk and we translate. My name is Uwais and we're going to be talking about the 2025 AI bubble which is happening right now, which could resemble in one way or the other the 2001 dot-com bubble. And before we begin, I'd like to introduce what's happening in the stock market and how some people view it, that it is kind of in a bubble territory. So, as we all know, the global AI market is the market value of the AI stocks are increasing, and they are valued at around 391 billion US dollars. Just the AI market by itself, which is expected to grow at a compounded annual growth rate reaching as high as 35%, which is a staggering number, all the way into 2030. Which would put this around 400 billion into 1.7 trillion dollars. So if you want to take this into consideration, this 1.7 trillion US dollars is even higher than the GDP of a lot of countries worldwide. This AI market could contribute in one way or the other to the global economy by almost 16 trillion US dollars, which is a huge amount, which is even close to the GDP of the United States of America as of 2025, which is, if I recall correctly, around 20 trillion US dollars. Now, OpenAI, which we all know from ChatGPT, the owner of ChatGPT is called an OpenAI, the company, I mean, its valuation has increased significantly as of lately. Around the beginning of its fundraising, it had a valuation of approximately $300 billion. This valuation has swollen to around 500 billion US dollars as of the latest fundraise. The CEO or the founder of OpenAI, Sam Altman, has been saying, a few things that we're gonna talk about in a few minutes. But this marks the largest amount ever raised by a private tech company, which is OpenAI. This $500 billion, guys, it's a huge amount of money for a company that's already just losing money. I'm sure you guys know that many of you are using ChatGPT, the free version, which I myself also use the free version. Maybe it's just sometimes we use, or some people use, the paid version of ChatGPT, and I think I read somewhere that the percent of subscribers to ChatGPT using ChatGPT is around 5%, which is, not very significant, and that's why OpenAI is still losing a lot of money, is bleeding actually money. Now, whether this continues into the future or not, we don't know as of yet, but what we can say that the company is losing money right now, yet the company is valued at around $500 billion US dollars, which is just mind-blowing. A lot of prominent people, like the CEO of OpenAI himself and Michael Burry, which we all know from the 2008 crash in the movie, we all know him, and even Bill Gates from Microsoft, they all are warning us about a potential bubble in the AI market. And so, as we can see here, if you see on the right chart here, I'll be zooming right now. If you see on the right quadrant here, so we first see the left chart. As you can see, the forward PE and subsequent 1-year returns, the historical average. So the forward PE of the market right now is marked here, which is 22.9, which implies a very low annual returns over the next year if it's comparable to the historical average. But if you look at the right side of the graph, I'll be zooming right now here again. So if you look at the right graph here, the forward PE, which is 22.9, the subsequent annual returns over the next 5 years, if it's comparable to the historical average, is around 0%. That means if today's market over the next 5 years is similar to the historical averages, anyone who invests in the stock market on average is going to make zero amount of money, and that does not even include things like taxes and the time value of money. Okay, now here, the market performance is now heavily concentrated actually in the top 10 companies from these top 500 companies, the S&P 500. The top 10 companies, we know them: Nvidia, Tesla, Apple, Microsoft, and these other companies. They are driving the overall S&P's 500 performance, while the remaining 490 companies are not doing as good when it comes to the stock market, when it comes to the share price performance. And as we can see here, the PE of these top 10 companies is around 30, which is compared to their historical averages of 20. The top 10 companies' historical average is usually 20. So the value of 30 as a PE right now is almost 50% higher than the historical average of these top 10 companies. While on the other hand, these remaining 490 companies, their current PE is around 19.7, around 20, let's say, while their average is around 16. So this implies like a 20-ish, I think, percent increase than their historical average, as compared to the 50% increase in the top 10 companies. So this means that these top 10 companies are heavily skewing the S&P's 500 value, such that they are reflecting more growth when the other companies are not as, overvalued, quote, as these 490 other companies. Okay. However, and actually, if you look at the chart right here, the S&P's valuation measures the forward PE. Here we can see that it's, as we said, 22.9. As you can see here, this graph goes back to 1994, which is even before the dot-com bubble. And we see this green line here, which is around a PE of 20 or 20.1.2, a forward PE. It has crossed this line only a few times, and when it does, it usually has a very strong correction after that. As you can see here in this chart, the 1999 or the 2001, when we had the forward PE crossing this cutoff, we see that a huge market correction has happened, and then again in 2020, in the coronavirus crash in 2020 in March, if you guys remember all that, I believe all of us were investors at that time. The market crashed heavily as well, and so it is important for us to take into consideration that this could be one of the signals that the market is overall overvalued. However, there are a few theories and a lot of people that say that this is kind of different from the 2001 dot-com bubble. So, for example, Bill Gates from Microsoft says, about the AI market, that something very profound has happened, and the world was very different at that time. Some companies succeeded in the 2000s, he's referring to 2001, while a lot were burning capital, including Microsoft at that time in 2001. The internet was kind of the biggest technical value at that time, and now again, which is even for Bill Gates, he's said that the 2001 or the let's say internet was the biggest technical thing ever in his lifetime. Well, now the AI market is shaping that even better, and actually most companies are riding this AI boom. Will eventually go bankrupt or disappear once the hype fades. So, for example, in 2020, you guys remember when it was kind of the hype for the EV market. So if you guys remember, not Tesla, of course, but the other companies, Lucid, Rivian, and many other companies, they were kind of hyped to reach values reaching $100 and $200 billion when they were actually bleeding a lot of money. And most of them have lost their market share either significantly or have even come out of the stock market. So only companies with strong operations, good financials, and good management with a good balance sheet have actually survived this storm. So what we gotta do as investors, we gotta focus on the companies with these consistent revenues, positive operating income, or those forecasted to have positive operating income consistently over the coming period. And hype-driven startups may rise fast, such as ChatGPT or OpenAI to be more specific, but only sustainable business models will stand the test of time. I hope that ChatGPT or OpenAI is one of them, because I personally and honestly, I use ChatGPT. I'm becoming to use it more and more often, because honestly, it's kind of increasing the productivity and decreasing the time we spend on a lot of these kind of technical things that are not really helpful. And we can see here something very interesting. So if you go back to the 1995, only one tech company, IBM, which we all know, was among the world's top 10 firms in 1995. But by 2015, there were two, Apple and Microsoft. And by today, 8 of the top 10 companies are tech-driven. So let's take a look at the chart right here. So top 10 S&P 500 companies by market cap. And if you look at the left lower quadrant here in the green, in 1985, the biggest company was IBM. But if you look forward in 2025, IBM is not seen here whatsoever. Okay. As for the 1995, you can see that it's kind of spread out into different companies, including Coca-Cola, which is never seen in 2025. If you see these companies in 2025, Apple, Nvidia, Microsoft, almost none of them were, or actually none of them were in the 1985. Just Apple has been there for the past, let's say, in 2015 and 2025. And Microsoft was in 2005 and 2025. However, they do not have to stay as the largest 10 companies throughout time. So it is really important for all of us to learn here a few things, that if a company is one of the best companies right now, its lead and performance does not have to stay forever or for many years. So we have to be careful assessing our businesses, the investments that we do on a constant basis, maybe on a quarterly basis. All right. So if you look back here, looking ahead in 10 to 15 years, AI could dominate, with 8 out of the 10 leading companies likely to be AI focused. So if you look at the graph right here, once again, Apple, they're doing something. Nvidia definitely is going to the AI stuff. Microsoft as well. Amazon, Tesla, and we all know what Tesla is doing with their robotaxi, with their robot. I just forgot its name right now. And the other companies, including Google or Alphabet and Meta from Facebook, they are definitely doing a lot of great things with their AI. And that is why we say here that looking ahead in 10 to 15 years, AI could dominate, with 8 out of the 10 leading companies likely to be AI focused. So I hope you guys liked the video here. If you enjoyed the video, please subscribe to the channel and try to share this video with your friends so that they know better how to invest in the current stock market and what to expect if it's a bubble or not a bubble.